Welcome to the Dev Ready podcast, where we're helping non-tech build great tech. Today, we're fortunate enough to be joined by Nick Uy, who is one of the VC investors at Investible, part of the team there in terms of how he can support startups and founders that are looking to garner some investment to fulfill their ideas and effectively dreams to bring some of their product concepts to market. Nick, thanks for joining us and coming on the Dev Ready podcast.
No worries. Thanks, Andrew. Thanks for having me on.
Before we dig into Investible and who you guys are, let's talk a little bit about Nick. I'd like to get to know who we're speaking to and let the audience know what your background is and how you really got to the place of VC investing.
Yeah, sure. So I started my career as a management consultant. So I was working in the industry for about 4 years or so. It's funny enough, I obviously, during university, I was actually quite passionate and interested in tech and startups myself. I built a few things, side projects with a couple of friends. Was always thinking about, joining the tech scene, but never really got the chance. When I graduated, there wasn't many graduate jobs or pathways into tech or startups, or even venture capital for that sake. So, went down the traditional corporate path into consulting, did that for a couple of years, and then, decided I wanted to leave. And that was where the Australian startup ecosystem started to grow, and there was a lot more roles around startups and even venture capital. And that's sort of where I made my first transition into corporate venture capital. So I actually joined a fund called Superseed Ventures, which was actually the VC fund of the Reese Group, which is Reese Plumbing, for those
They've
in
done
Australia.
quite well from what I understand and hear about from a Reese plumbing perspective in investing.
Yeah, well, Reese has obviously done really well as a business, and a bit under the radar, but they were doing venture capital investments as well, predominantly in
Fascinating.
North America and Australia.
Okay.
So was part of that team for almost 2 years, and then transitioned over to Investible now, where I'm currently at, focusing on early stage investments in ANZ and Southeast Asia.
What excites you about early stage investments as we walk into 2025? What is as we know, we've been through a bit of a challenge over the past few years, probably ramping and improving. But what's the market look like? What's exciting you about 2025?
Yeah, I think there's going to be a lot more, hopefully a lot more capital deployed this year, based on the signs that were shown last year. There was obviously an improvement in the market sentiment, particularly around early stage investment, predominantly. So I think there's going to be a lot more funds deploying into early stage companies. And that's obviously positive news for founders as well, who are building early stage startups. I think overall there's been a trend around, obviously you can't ignore AI. I think that's definitely
It's all around us right now.
yeah,
Yeah, correct.
definitely a big enabler in terms of making it more efficient and effective to build software companies nowadays and or AI enabled companies. So I think that's going to continue helping founders continue to build at a much cheaper cost as well. So hopefully that means more startups in general.
Yeah, interesting take. In terms of early stage, describe that for our listeners because everyone's got a slight different take. Early stage might be revenue, might be pre-revenue. Where does it sort of sit in your mind at Investible?
Yeah, for sure. So we at Investible, we focus predominantly on we call it pre-seed to Series A. Like those are the stages of investment. So what that means in reality is pre-seed investments typically can be businesses that are not or pre-revenue, so not generating revenue. So that's sort of the early stages where they might have a product or hopefully an MVP in place, but again, no paying customers, but maybe some users. So that's sort of where we typically the earliest we invest, all the way to Series A, where they might be generating, let's just say 2 to 5 mil of annualized revenue. In that sort of range. So yeah, it's still quite early stages, obviously compared to much larger companies, but quite early stages in terms of where we invest.
So let's dig in more about Investible then. So tell us about what your ethos is. Who do you like to bring on as founders? What's some interesting stuff for you right now? You said AI is around right now in terms of what's going on. It's everywhere. If you look at LinkedIn, the noise is all about AI startups, AI products. Are you seeing a flood in that space predominantly, or what are you seeing coming through your books at Investible?
Yeah, for sure. So maybe I'll just give a quick intro about Investible because I might give a bit of context. So Investible is an early stage venture capital fund based in Sydney, but we also have an office in Singapore, and I guess that's probably quite different from some of the funds in Australia, is that we do have that Southeast Asia market presence where we look beyond just ANZ, but also invest into Southeast Asia more broadly as well. So that's sort of like our ethos. We're a generalist investor, so we invest across all business sectors as well as business models. And I think one unique thing about us is that we have multiple VC funds, but we also have an active angel syndicate called Club Investible sitting alongside our funds. So that's a syndicate group that can co-invest with our funds on every deal. And we like to bring that group to add strategic value to our companies, to our portfolio companies as well, which is a great value add there. But to answer your question around what we look for and what we're seeing, I think we invest in software companies, of course, but we also look at hardware and deep tech companies. So we actually are looking more, I guess, more recently at some deep tech companies, given the rise of AI and potentially AI infrastructure. So those that can plug the gap into or feed into supply chain of AI applications. So that's on the deep tech side. On the application side, on the software side, sorry, this is where we're seeing, as you mentioned, there's a flood of AI enabled startups at the moment, and rightfully so. It's much easier to build, using open source large language models. But I think what we care about specifically in the early stages for those companies is defensibility and how you're going to build a defensible company, or we call it a moat over time, where you can really win your market share in the target segment you're in. So I think we're pretty keen. Having said that, we're pretty keen on vertical AI applications. So within specific industry verticals where the generalist solutions or horizontal solutions may not provide a tailored solution to specific industries, and I think that's where the use cases are more powerful, and the data inputs are much more refined and constricted as well. Where I think there's
it does seem like if you're going to build on top of and customize and work with AI and build solutions around it, going complete horizontal across all industries probably going to be a difficult chase, I would imagine, and probably a lot of competition and very hard to differentiate. Like you said, if you pick a vertical, maybe it's industry focus, to basically solve a key solution for. It obviously limits your market though from your niching down. How does that impact in terms of the way you guys consider investment? Because VC is all about how do we get hyperscale, but then if you're going a bit more niche, how does that impact when you're looking at AI tech solutions?
Yeah, it's a really good question. And rightfully so. I think within vertical applications, you need to be aware of the market constraint and how big the market potentially could be. But I think the way we view it is if you're solving a specific workflow, for example, within an industry, and that workflow is being solved really well by AI, whether it be like agentic solutions or other means, I think there's an opportunity to expand wider in terms of broader workflows or use cases. And I think that's where you can ultimately, hopefully you can end up winning the entire end-to-end workflow within an industry. And I think that's where it's really where the solutions become really powerful and can add a lot of value, and hopefully the customer would choose your solution versus choosing multiple solutions. If that makes sense.
Yeah, in the end, having 10 software products, and we all have many subscriptions, but it becomes a bit problematic to manage, and you want to keep something under one hood. In an ideal scenario, you're just working with a couple of solutions, especially operationally, if you get down to that point. So I'll say a bit of opportunity going on there. How do you feel about all the products that are just throwing in AI into every single product that is out in the market and just retrofitting it in? Or do you feel like there's an opportunity to reinvent and build AI first driven technology? What are you seeing in that space?
Yeah, it's a funny one because obviously with the hype, everyone is adding some AI element, and it's so easy to build on top of open source LLMs nowadays. Also, it could be essentially wrappers, right? So I think what we're thinking is, I think ultimately in the long term, the sort of positive or long term view is that every software company will ultimately be an AI enabled software company. That's just the reality. I think if you don't adopt AI in the long term, I think you're going to lose out just based on usability and customer customer feedback in terms of what they're wanting. But having said that, I think we do like companies and founders who have focused on the customer first, not necessarily AI first, because they they're very intimate and understand the problem very intimately. And it doesn't have to be an AI solution first, but if they started with a software solution that's really solving the problem well, but then over time, as the customer feedback is more refined and iterated, that's where they can start to add AI elements and AI features. And I think that's where ultimately the platform becomes more powerful because it's solving, like it originally solves a core need for the customer, but as over time, AI can add that just little edge in terms of adding value to the customer, and it could be efficiencies or other means as well.
Well, you mentioned deep tech at the top of this in terms of areas you're looking to invest in. What's the market look like in Oz in terms of deep tech in AI? What are you seeing? Who's coming to the market in Australia specifically? Because I find it quite interesting. There's a lot of conversation around what's going on all through the US, through Asia. But what are we doing in Australia to keep up with what's going on in the deep tech level at AI?
Yeah, really good question. And what we're seeing is there's not many Australian companies building AI infrastructure. Just given the competitive pressures of the US and the capital requirements to really compete, with those larger players. I think that's rightfully so. So that's probably not the area where founders could win here. But I think what's really interesting is like other adjacent infrastructure plays where you could fit into a specific area of the AI infrastructure layer, right? So, if I give an example, like one company we've recently invested in is actually building, semiconductor or helping with the packaging of semiconductor materials that will feed into the advanced packaging of semiconductor chips, right? Which is ultimately a feeder into AI applications. So that's like one example of where we see this opportunity, where if you can help optimize or create more efficiencies in the production of semiconductor chips or AI machine models or models in general. I think that's where there's a big opportunity, right? There hasn't been many Australian companies, to be honest, in that space.
No, there's not, but I think there's some like the internal what's going on with DeepSeek and what they were able to achieve, lower cost constraints. Obviously, the cost to build these models has been significant. Maybe there's a changing of thinking in what could be possible, which might bring some other people to the table rather than I need $100 million to do X. There's potential to change the dynamic and implement differently. What are your thoughts on that potentially driving a bit more people digging into let's build our own LLM, or is the market too flooded and are we just having everyone building LLMs and we just need to build on top of these to find real core solutions for customers?
Yeah, well, I think back to my previous comment, I think building your own LLM or infrastructure play is going to require a lot of capital, like significant amount of capital, and maybe we haven't seen in Australia because of that reason, because there hasn't been much available capital to deploy into those areas and to sustain that funding over time. So potentially investors are a bit more skeptical and a bit more hesitant to deploy in those areas. So that's a bit of a hindrance, right? So I do agree. Like, ultimately we want there to be more providers of AI infrastructure. They're obviously limited now to the bigger players in the US and now DeepSeek, etc. But I think it's definitely a good thing if there's more providers, because it means it's cheaper availability, cheaper for founders to build on, more flexibility in terms of applications and what you can tailor to as well. But time will tell, right? It's hard to say. Maybe over time, once the infrastructure costs are lowered and there's more efficient ways to do it, then there could be an opportunity, right, at that layer.
There might be. Let's see what the market looks like, and it might be over flooded by the time we get to next year or two. There's a lot of people coming into that market, and it seems to be a lot of the big players driving a lot of this technology. That's where it really sits at this stage, other than the odd occurrence like your DeepSeek type model. But let's see how it flows through. In terms of a VC. Let's talk about your world. What's a day in the life of a VC? Because I'm imagining you get 100 messages in your inbox with, I've got this idea, great idea, I've got that, a great idea. What does it look like to actually be a VC? In reality, everyone needs capital and resource to be able to pull off big ideas and strive for something that's out of the box for them and trying to make a bigger impact. What does it mean for you day to day? What do you do?
Yeah, really. I wish I could give a very clear answer, because this is very cliche, but every day is like very very different. But I would say, like, there's probably three key areas that I probably focus on in terms of my like my time blocks during the day. I think the first is, as you mentioned, meeting founders who are building early stage startups. I think, I get a lot of inbounds from LinkedIn and our website, and or people referrals from other people in our network. So yeah, meeting founders and identifying and screening those opportunities is probably a big part of my day. So throughout the week I could have 5 to 10 company meetings a week, as
Got it.
on average. So that's sort of the volume we're getting. The second area is once we identify and screen those opportunities, like who are the ones we really want to dig further into and do due diligence on to potentially bring this opportunity to our investment committee. So that's probably a big part of sort of like the deep focus time in the day, where I really need to drill down into the business fundamentals and the business itself. And then the third is, once that's all good and we proceed to the investment committee, I think presenting and preparing materials for that investment committee, hopefully to get those companies across the line for an investment. I do also spend a bit more time on supporting our portfolio companies as well. So that's a big part of the day job of a VC, is to
Yep.
ensure after investment the investment succeeds and the company succeed as well. So that's a big part of it as well.
There's a lot going on there, isn't it? In terms of DD, let's dig a little bit into that, because it'd be great to open the hood on what are you actually doing through a DD process. What are you looking for? What type of business models are you finding that are a little bit different these days? Subscription has been a model forever. Is that changing? Are you seeing different models coming through? I'm talking specifically software, not necessarily you're always investing in software, but in the software space predominantly. What are you sort of seeing in terms of different models? What's a DD process look like?
Yeah, awesome. I'll answer the first question around different revenue models or subscription models first. I think you're right. Like traditionally, SaaS has been subscription based, and I think rightfully so. It's annuity income revenue streams for the company, but also investors like that because it's more sustained. I
Yeah,
think we have
correct.
seen a few alternate models. For example, it could be based on usage of this particular application, or API calls is one example that comes to mind, where the more API calls used, the more you charge. So that's one example as well. So I think there's usage based, there's subscription based. There's obviously tierings based on those subscription based models as well. So that adds a bit more complexity. But I think those are probably the two key pricing models that we've seen in SaaS. It hasn't really deviated too much. Like there's nothing too crazy.
Nothing out of the box. Yeah.
Yeah, nothing too crazy so far. So I think rightfully so. But to answer your question around due diligence and what we look for, it is quite comprehensive. Like we don't maybe just for context for your audience around early stage startups, it's not necessarily all about the numbers and the metrics, particularly at early stage. I think what we really care about as well is probably underlooked by a lot of people, is the founders and the quality of the founders, and particularly what is the unique insight that these founders have into the problem that they're solving. So we want to know why you as a founder versus someone else who's building a similar solution, right? And usually that's identified by that founder having a connection to the problem personally, or maybe they've experienced it firsthand. So we call that founder market fit, but that's a really big part of our investment thesis, like understanding the founders and are they the right people to back in that space. But beyond the founders, we look at things like the market you're operating in. Do we think the market's going to be growing? Is there strong tailwinds there? Obviously, we need to understand your product as well. So, what features have you built? Is there a strong customer love from your user base? But also, is your product differentiated, and could it be differentiated over time? Things like that. I could go on for hours about our process, but it's quite comprehensive, and we do factor a lot of those things in. But I think those are the key areas that early stage founders to focus on, is communicating those concepts quite clearly to investors.
Yeah, it's an interesting point, and I find that numbers are a little bit challenging early stage. Everyone can bring up an Excel spreadsheet and say we can get 100 customers in the first month, 200 in the second month, 500 in the third month. But how do you back that, and how do you build some reality around that? And I think there's more to it than that. I find that, yes, I agree. The founders are the ones driving it, the ones that need to have resilience behind them and be able to deliver on this. How do you test that? I find that fascinating because we've been around founders for a little while, and it's an interesting take. I find that people that can sell and communicate and want to dig into the customer problem seem to be the best founders in my mind that I've seen. I'm not sure what you're seeing, but in terms of what are you looking for when you speak founder specific? So you said, yep, they understand the problem. They're basically, what else are you weighing up? Age. What are you considering there? Experience, domain expertise. There's a number of factors. I think that's probably one thing that really sets a startup apart is the founder side. There are always competitors. That's the reality. And if they're not a direct competitor, they're an indirect competitor. So in the world we live in, there's competition everywhere. What do you see, and how do you pick the best founder? Because it's quite interesting from my perspective around what the founder can look like and what they want to set themselves up for to be able to be investable, in my mind.
Yeah, a really good question, and this is something that is it's more of an art than a science. If that makes sense. So it is quite subjective. To
It
be honest.
does,
Some
yeah. It's
investors
very
will have-
subjective, yeah.
Yeah, some investors will have certain views of founders versus someone else. So again, this is more broad speaking, but I think there's probably three areas that we assess more broadly from a founder perspective. Is the first is, as I mentioned, the unique understanding of the problem. So I've touched on that before, but yeah, how uniquely positioned are you to understand the problem intimately? Can you solve that solution, or do you have a unique insight into how you solve that solution? That's probably more on the domain expertise side. The second area is like technical skills and functional skills that you can bring. So that's more sort of looking around your previous work experience or previous experiences more broadly, just understanding within the role of a founder, like are you technical, are you non-technical? Depending on the solution you're building, right? Like we need to understand that you can bring some value that other people couldn't. So
Yeah,
if
makes
you've
sense.
worked for many years in industry, or as a CTO at other companies, or you're a second time founder, those are sort of the things that we holistically want to understand. So
Okay.
that's probably more on the technical side and functional side. And the third area is actually often overlooked, but it's actually the motivational and the soft skills and characteristics behind a person. So that's just understanding, for example, the intrinsic motivations of the founders. Like, why do you want to be a founder? Why do you want to go on this venture pathway, right? And why do you want to commit the next 8 to 10 years of your life building something like this, something crazy like this? So that's sort of understanding the intrinsic mindset of the person. Are they gritty? Can they adapt to challenges over time? Those things are really hard to assess, but
Very difficult to assess, yeah.
very, very hard
Not
to
easy.
assess, and a lot of character references and talking to people who know them. So those are the sort of things that we try to understand. Again, you can't get 100% clear picture, but
Yeah.
the more insight you can get into that, the better.
Yeah, that's a fair take on that. Let's move on a little bit. As a founder looking for investment, why Investible? Why would I come to you? What stands out? What do you do differently to other VCs? Is it just about the money, or is there more to Investible?
Yeah, really good question. I think there's probably two focus areas that or differentiators that we bring. I guess to founders specifically. As I mentioned before, the first is we've got that Southeast Asia market presence, and not a lot of funds in ANZ do have that connection, and we're quite fortunate to have strong partners and supporters, investors as well, supporters within that region where we can help with go-to-market expansion very quickly from ANZ companies here who want to expand to Southeast Asia. We can immediately activate our networks, whether it be customer networks or partner networks, to help accelerate go-to-market. So I think that's an easy win for us to help you. You don't have to go down the Southeast Asia route. That's obviously optional and there if you want, but most founders typically do want to explore that option, just given we've got the networks there. And the second area is around our angel syndicate. We're quite a unique firm in that we've got a VC funds, well, multiple VC funds, but also have the syndicate sitting alongside that, and that's a really powerful engine because it allows our LPs and investors to co-invest directly, so they're bought into the companies they're backing, and also they want to be more hands-on as well in terms of providing support, strategic value and advice to our companies, and that actually helps founders because they want to be more connected to people helping them, and not necessarily rely just on the investment team, for example, to provide all the value. So, and we like that because a lot of our investors do have the industry and domain expertise in whatever industry they're in. So, a lot of our founders find it quite valuable.
You would. I've been connected a little bit to. I'm down in Melbourne to Melbourne Angels quite a bit. There's always good people and people with different backgrounds and experience across that. So you do find that from Angels, and they want to be a little bit more hands-on and help out where they can. And some of them are retired investors. Some of them actually got that sort of portfolio, so that can support and help drive the founder or open up networks and connections, and just maybe put out a helping hand. So appreciate you sharing that. If I'm a founder today that's really early, let's go really early, pre-product, got no product, I've got a concept, what do you recommend they do before they start flooding your inbox? What should they put together? What should they be ready to have a conversation with you about?
Yeah, I think the first question that a lot of founders don't really think about is, do you want to go down the venture pathway? And it's kind of counterintuitive, but you don't necessarily have to go down that pathway, and there can be really solid, successful businesses that don't ever raise funding from venture capital or even external capital in general.
To that question, let's talk about pros and cons. Why wouldn't I go down this pathway? Let's just open it up a little bit. What do you see? What are the great reasons to go ahead with this, and what are some of the fallbacks of going down this path?
Yeah, I think for founders, I'll talk about the venture pathway first because that's where I focus on.
Yeah, correct.
But if you're a founder that wants to really you've got a product, or maybe you've got a product idea that you think can scale really rapidly, and you think this could be a really, really big business, and you want to go down that pathway, and you obviously need capital to do so. I think that's where venture capital could be a fit for you. So I think
something hyperscale, yeah. So there is scale. There's a bit of traction in showing that scale is possible, and we need some funds to fuel the fire. Effectively, that's what we're looking for here.
Yeah, correct. And just for alignment, VCs and investors more broadly, they want to see you scale because that's obviously where they make their return.
Yes.
For their investors. So there needs to be a bit of alignment there. And also, if you take on venture capital or even external capital, you will have an obligation to investors, right? To meet the expectations around the growth profile and other governance procedures as well. So that's sort of something that you need to think about because that's you're now accountable to a third party versus if you bootstrap. It's all you and the co-founders, and
different.
Yeah, very different, and you could have a much slower growth profile, but that's not necessarily a bad thing. It's just up to the personal founder's interests, right, and what they want to build. So that's why I always, if founders are asking me like, what should I do? Should I take on VC funding? I always ask them that question. It's like, how committed are you to going down this pathway? Because ultimately, if you take on external capital, you're going to be spending the next 8 to 10 years, as I mentioned, building something that is going to be very, very hard to do because being a founder is quite difficult already, but having external pressures and the funding
just piles a little bit more on top of that. Yes.
Yeah, exactly. Yeah. So it's not for everyone, and I definitely say that. But if you are committed and you want to go on that journey, I think that's where we'll explore the conversation.
That makes sense. So people just to consider that in terms of there was a bit of pros and cons thrown in there. So thanks for sharing. And other options are bootstrapping. Selling product to customers is a great way to fund. So we run a product in pharmacy that we effectively took a concept from a customer we built a version 1 of, and then sold them version 2. They invested in, we own the IP, and they got a bit of a royalty for the first 3 years in terms of kickback for us to scale that out. And it's in about 1,000 pharmacies now, no external funding. So there are other ways to do things, but it depends what you're trying to achieve. That product wouldn't be hyper scalable anyway. So you wouldn't be attracting a VC, but it's still a profitable business entity, and in its own right, it's doing quite well for itself. So there's different models. It depends what everyone's looking for in terms of what they want to get to in terms of big picture. And am I trying to be that unicorn? And when I hear that, I find that quite fascinating. A lot of people talk about being a unicorn, but in my mind, let's build a great business. Let's build a product that people want, desire, love, and growth and money will come. So there are different ways for sure to do this.
Yeah, it's a good point as well, because I think you mentioned 100% is that you should focus on the customer first, right?
Yeah.
And selling a product that customers really, really love and rave about.
Correct.
Because that's ultimately the best. If that's the best source of capital, is just reinvesting capital from customers. Yeah, exactly. That's the thing that is often overlooked.
Yeah, no, brilliant, Nick. Well, thanks for coming on the Dev Ready podcast. Really appreciate you coming on, sharing a little bit and opening the hood around a day in the life of a VC and what you're looking for in Investible. If anyone wants to reach out and connect and probably thinks they're ready to have a conversation with you, how do they find you?
Yeah, awesome. Well, feel free to reach out on LinkedIn. I actively check my messages, so you can send me a message or send me a connection, and I'll be in touch there. Or alternatively, if you want to apply for an investment, feel free to visit Investable's website, and you can submit a form for application for funding there as well. And yeah, one of our team will be in touch.
Perfect, Nick. No, thanks for coming on the Dev Ready podcast. Really appreciate your time, and good luck in 2025. I'm sure you'll get plenty of AI product getting thrown at you. So let's see where the market goes. It's evolving that quickly that who knows what's coming. So yeah, it's a very interesting space right now.
Yeah. No, thanks, Andrew. Thanks for having me on, and really appreciate it. And yeah, great to chat.